Hello, Maverick Currency traders. Welcome to 2025. This is Rob Reinhold, and we always do this every year at Maverick. We always like to take the last year, memorialize it, take a look back, take a look at some of the themes, tie a little bow on it, and then send it off into history. As a trader, I think it's really beneficial at the end of every year to stop, run your numbers. Run your numbers and say, okay, how did I do last year? And then take a look at those numbers and say, okay, how can I do a little bit better? What were some of the things I didn't do as well as I wanted to that I can do better? I think it's a great moment to refocus yourself on the trading psychology stuff, some of the psychology mistakes you made. And then, of course, we look forward after that. 2024 is gone, and it doesn't care. And the market won't remember what happened. If you killed it in 2024, great job. We love it. Pat you on the back. But guess what? The market is not impressed. If you go into 2025 thinking you're all that, the market is going to teach you. If you didn't have a great 2024, well then shake it off. The market won't remember. You need to start first of the year just dedicated to trading correctly and following your trading system. So we always like to look back, and then we like to give predictions. At least I love to give predictions. I've been trading now for 28 years. I have literally been wrong at least 10,000 times, if not 100,000 times. My ego is so gone. There is no ego as far as calling markets. So I have no problem making predictions. I will make these predictions in this video, and I will completely forget them in about 1 hour. And whenever I do this video, I always have to dig out last year's video production and say, okay, what did I even say? Because again, we trade the price action. Whatever the market does is how we want to be traders. So let's go ahead and get started and look back at 2024 and look forward to 2025. I'm joined by Ankit Sharma, and I'm also joined by one of our coaches and project manager, Edge Fish. So we're going to be talking about what we saw last year. Now, these were the predictions that we had last year. So let's give ourselves a little report card. Let's grade ourselves on how well we did. We called for the S&P 500 to be up between 5 and 15%. That was a little low. The S&P went up 22%, 23% for the year, so we were definitely too low. We called for international between 10 and 20%, and that came in at 15%. So I'm going to give us a B minus, somewhere in there. So we called for an up year, but it was definitely more bullish than we thought in equities. As far as interest rates, we made a call of no rate cuts. Now, this was a very, very controversial call because the market was pricing in 5 rate cuts in 2024. And actually, Goldman Sachs was predicting 6 rate cuts. We took the other side of that and said, we think the economy is going to be stronger than everyone thought. And we said, we think the Fed is not going to make any rate cuts. Well, we looked pretty smart up until the fourth quarter of the year when we finally did get those interest rate cuts. I'm going to give us a B plus, because again, everyone else was calling for major cuts in the first quarter, the second quarter. We didn't get them until September. Commodities, we said oil flat, metals and materials up. Nailed that one. We'll take a look at all the numbers. Currencies, we called for the dollar and the pound to be the strongest 2 currencies, and guess what? Those were the 2 strongest currencies. We called for the Aussie and the Kiwi to be weak, and those were the weakest currencies. So we definitely had a nice call in the forex market. And crypto, I wanted to give maybe a B minus, or a C plus. We said the rally broadens, which it did, because back in 2023, it was all Bitcoin. It was really all Bitcoin. Everything else lagged. We said it's going to broaden to other cryptos, which it did this year, but with mild returns. There was nothing mild about the returns in crypto. We'll be taking a look at the crypto markets as well. So really the major themes, S&P up 23%, NASDAQ up 28%. The bond yields, they've traded between 3.75 and 4.7 all year. We hit both of those ranges 2 times last year. So really, just really hanging in there between those. We got the FOMC finally cut rates late in the year, but when they did it, they actually did 3 in a row. And the last one, the yield curve uninverted. Now, this one was really more for our stock and options traders, because in the world of economics, there's things that people look for that trigger a recession. And one of the things is a yield curve inverting. That means where the shorter term yields were higher than the longer term yields. So like a 10-year bond paid less than a 2-year bond. That's really abnormal. And that's one of the signals of a bear market. So all my perma bears over in our Maverick trading division, they looked at that and they said, oh, yield curve is inverted, recession is guaranteed. Well, guess what? It was not guaranteed. And for 2 years, this stayed inverted. And finally, when it got uninverted, I threw a challenge down to those traders, said, listen, if you got really bearish when that yield curve inverted, are you getting really bullish because it's uninverting? And the answer was no. We're not bullish yet. We're still, again, we're perma bears. It's very difficult for them to get bullish. So basically, I think the Fed has gotten us back to a good place. And it's crazy to say this because it's very popular to bash the FOMC. It's a very popular thing. Everyone loves to trash the FOMC. But guess what? They did a wonderful job, in my opinion. Okay, what do you think about that? Do you think the Fed actually really nailed it this time?
Yeah, I definitely agree with you 100%. I mean, we talk about this whole soft landing, and I must say, I kind of, thought about it and say, yeah, I don't think they're going to do it. But, we had some moments in there where we thought that, yeah, no, soft landing is not there, but it seems like they pulled it off. I mean, the resilience in that economy, U.S. economy for the last couple of years has been fantastic, where, they're able to go through this spike in the yields and then the cut rates. And then if you look at it throughout the whole cycle, the market's been okay, economy's okay, so kind of holding it really well there. So as much as I would love to, not take the credit for making that call, but I think, they definitely pulled the soft landing this time.
For as much as they blew it in 2021 and being very late to raising rates, I mean, they were way late. Remember when they would say that inflation was transitory, when it was just raging like 6 or 7%? They blew it there, and so they deserved all the criticism. But I think we got to give them a round of applause. Like, it was really well done. So FOMC, I think, did a great job. But let's talk about some of the other central banks. The Bank of Canada ended up being the most aggressive central bank in the world and cut rates just way more than anyone else to try to stimulate their economy. 2024 had a lot of central bank activity. I haven't seen that much central bank activity since probably 2020 when we had everything with COVID. We're probably going to see a little bit central bank activity this year, but still going to be very important. Crypto had a great year, and Bitcoin, look at that Bitcoin surge. Edge, did that surprise you at all that Bitcoin surged that much?
Well, not really. Well, yeah, actually it did. Because we had, we had a nice run up in the beginning of the year, and then we kind of plateaued, stayed in a range. And you could say there's a number of reasons for that range being there. But then towards the end of the year, there's so much talk about Bitcoin becoming a more usable currency out there that it just launched. As one of my friends said on social media, Houston, we have liftoff at the end of the year. And it just popped up over the $100,000 mark. So it surprised me that it moved so much. I knew Bitcoin, or I had a feeling Bitcoin was going to be strong, but it surprised me how much it moved.
Let's take a look at the final numbers here for the year. It was a really bullish year across the board. I mean, pretty much everything went up. It was just a question of how much things went up. The only weaknesses were in things like platinum. Platinum had a very weak year. I don't trade platinum, so I couldn't even give you an idea of why that happened. Chemical companies were extremely weak last year, and you can see the Kiwi was weak as well. The Kiwi was the weakest currency across the board. You can see down 5%. That's a decent down year. The yen was also down this year. We're going to be talking a lot about the yen in this session because we think the yen is actually probably the trade of 2025. Dollar absolutely crushed it. Pound, number 2. And you can see everything else just really flat and muted. This year, you really had to be picking your shots of where the market was and where the currencies were moving. Very, very important that last year, and we think even more important this year, to really identify what currencies are moving and completely ignore the currencies that aren't. Let's take a look at some quick charts here. We're going to take a look at S&P. This is a weekly chart on the S&P, and you can see this is a bull market. We had higher highs, pullbacks to the 20-day moving average, run up, pull back, big gap down, a run, make new highs. Again, this is all just new highs with pullbacks in between. That's all it was, just a bull market. So when we take a look at where we ended the year in a very, very bullish position. Our equity outlook in 2025 is we're going to be slightly below the average return. If you take a look at all of the years after a presidential election over the past 70 years, the average return is about 11, which is about the average return of the market. We think it's just a tiny bit less than that. We do think the economy is going to do a little bit better than the stock market. What we've seen over the last couple of years is the stock market has done way better than the economy. I mean, extremely just a divergence between those two. We think this is the year that the stock market probably bases, consolidates, while the economy keeps strengthening. We do still see some problems in international, and that's really going to be about the dollar, and we're going to talk about that dollar. This is my call. I think we see a first or second quarter correction, a pretty deep correction in the U.S. markets, and I think that's going to lead to a sell-off globally. I was saying this back in October, even before the election, we knew who won the election. I said, look, I think we're just setting up for a correction after all this spending is going into the election. I think there's going to be just this little bit of a sigh, and we're going to see the economy maybe wasn't as strong as everyone thought it was. I mean, we got 3% GDP prints in the third and fourth quarter. Those were just really strong numbers. I think we're really probably closer to a 1.5% to 2%. So I think we do get that correction, and I think during that correction, that yen is going to be great. One of my complaints of last year was that the stock market was a very narrow market. What I mean by that is that there's a group of stocks called the Magnificent Seven. They've named these the Mag 7. This is Apple, Microsoft, NVIDIA, Meta, Tesla. I can't remember all of them. Anyway, you guys know what I'm talking about. Those are now 31% of the S&P. They drove everything. Outside of that, it was not a great year. It was an okay year, not a great year. I did not like it. I want to see rotation to where it's a broad market rally. I can't say that I see anything different because these companies are so powerful and they're being so driven by AI that I don't think it ends. Edge, what do you think? I know you use AI a lot and you're into this. What do you think is the story for AI going forward?
I think we're going to keep seeing AI integrating into everything around us. Early or late 2023, that's when ChatGPT first broke onto the market. And then it kind of trickled along at the beginning of the year, and then it just exploded. And now everything is either integrated with an AI or has a built-in AI. I don't see this going away. I see the strongest players being the ones who can keep innovating AI and making it stronger. So it's here to stay, and I think it's going to keep getting bigger.
And those Mag 7 stocks, they have so much money. Like, it is ridiculous. If you take a look at the balance sheets of those 7 companies, they're all sitting on 50, 100, 150 billion dollars of cash, and they're just looking to invest that and innovate. And AI is pretty much the only thing going on right now. So I think that continues. I do think the equity market is going to have a more bullish second half. One of the reasons I see a correction in the first or second quarter, we have a new administration into the U.S., and they're going to be trying some new things. Some of the policies that they've talked about are not all that great for the economy. I think we have a moment of freak out that some of these policies look very damaging to the economy. We get that correction, and then in the end, they find out they weren't really able to pass any of these, and we go back to a more normalized world. So I do see the second half for equities a little bit better. Now, as far as yields go, here is where we ended the year in yields, and you can see we are very, very range bound here. So we've got 3.65 up to 4.7. That range has been there for a while. Anke, you do a lot with interest rates. What's your call here on rates going forward? Do you think we punch out and we make a big run up above that 4.7 or 5%, or do you think we hang in here?
That's a great question. And, if you just take a look at the yields, and this is not just a U.S. phenomena. Right now, we are seeing the same thing across the world. The bond market is telling us something different than what the broader other markets are telling us. So again, the question is, where do we go from here? Well, we say the direction seems in the shorter term is still to the upside. So until the economy really weakens, I won't be surprised that if it kicks higher, or maybe punches higher from that resistance level. I mean, we are seeing right now, same thing happening in the UK. The borrowing cost is the highest since 2008. We are seeing this is a global phenomenon. So again, there's a big question here. Where do we go from? And I think bond market is definitely doing something very different, than what we are seeing in the rest of the market. So I think this 2025 is going to be a big bumpy year. We're expecting a whole lot. I don't think there's a whole lot of drivers that's just going to drive the markets, including the Trump factor that we talked about. We take a look at yields, we take a look at economy, and then we have this potential disruptor. As we haven't even had the new presidency yet, and I must say, we already have some tweets that move the markets. So this kind of just reminds me of 2017, 2018, 2019. These are the external factors that's going to drive a lot of the movement. So I think this is going to be a great year as far as volatility goes. And I think this is going to be a bit of a bumpy ride compared to the last year or two, where it's been a more steady climb up. So that's what I expect. And again, the bond markets. There's a lot of external factors. I think that's gonna eventually resolve, and we'll find out which way will win. But yeah, I think expect a bumpy ride.
Before the session, we talked about all the central banks and kind of what we thought was in store for all of them. And the consensus was that the RBA is likely the central bank that is going to be the most aggressive on the downside. And we think that the Bank of Japan is likely to be the most aggressive on the upside. It's one of the reasons why we're going to get to our currency outlook that we actually like the yen to the upside this year. We think the Bank of Japan is going to make a change in their policy and start aggressively hiking rates. And we think the RBA is going to have to start to cut rates. Remember, the RBNZ cut rates 3, 4, 5 times last year. And that's why the Kiwi was so weak. While the RBA, they said, no, we're not cutting. And they were actually able to stay fairly flat. We think they're going to have to play a little catch up here. So let's take a look at just some yearly charts, end of the year charts here. And right, as you can see, we've got the dollar trading up at its high of the year. Can the dollar go higher? We've had the consensus that the dollar likely stays strong, but probably can't go all that much higher. At this point, going any more higher on the dollar would really damage a lot of things. And we just don't think the story is there for the dollar to go substantially higher. That being said, we think the dollar is going to hold up at these high levels for at least most of 2024. In the yen, you can see we closed here in the middle of the range. But Ed, you mentioned something about this as a reversal pattern, and I really like this on the upside. What do you think?
Yeah, this is a great reversal pattern that we see setting up here. And I love it when the chart in front of you shows a reversal pattern setting up. And then we also have the economic data and the forecast also agreeing with that. This could be a great trade for 2025, yen going long.
Yeah, and we like the story with the Bank of Japan potentially getting a little bit more hawkish on interest rates. Swiss franc opened up about the same place it closed, and you can see the last 6 months of the year, there was nothing going on Swiss franc. And look at euro, very much just in this big wide range. So the euro didn't really go anywhere. Again, these are the baskets that we create at Maverick to show relative strength against everything else. Then we come to the risk currencies here. We got the pound. The pound was in a nice uptrend all year. Nice uptrend. And we ended up making a new high at the end of the year. Going into the first of the year, you've got to be bullish on pound. You've got to be bullish on pound where it is. The question is it going to be the strongest currency in 2025? I don't think it is. I don't think the story behind the pound is all that great. The story in the pound in 2024 was inflation remained higher than the Bank of England expected, and the Bank of England was not aggressive at all in rate cuts, where the European Central Bank and the Swiss National Bank were more aggressive. So I think it's going to be stronger than those other two, but I don't see it being the strongest currency. We come over here to the CAD, and I actually like the CAD on the long side. We're going to talk to our resident Canadian here, Mr. Sharma. the CAD was horrific at some points during the year. I mean, this period from July to October, I mean, that was just an absolute cratering of the CAD. But since then, we've seen some decent price action that shows we could be nearing a bottom here. CAD is on the top of my list for a good currency in 2025. What's your thoughts?
Yeah, I agree. As we talk about central bank activity, and I think that's what we're going to focus on. And if just to go back in 2022, CAD was the first central bank to actually start raising rates, and then follow the suit by the U.S. and then followed by suits for all the other central banks. And if you really take a look at last year, I mean, CAD is the one that really kept up with this, cutting the rates, and they actually gotten down to a decent level. I mean, they're down to like 3.25%. And I mean, if you take a look at where we are with central banks, pound is the highest right now at 4.75, followed by the dollar, followed by the Aussie and the Kiwi. So I think CAD is in a good spot, where we even had a last central bank meeting where they say we can now sort of take a bit of a back seat and kind of let the data dictate where the just interest rate's going to go. So I just personally think that the CAD probably hold in here, or even go higher, and especially when we take a look at that disparity between the dollar and the CAD. If the CAD holds and dollar moves lower, and I think that's where we can see CAD sort of appreciate in that shorter term. So I do like I don't love the CAD short here. I think if I have to go over other shorts, Aussie probably better short. I think CAD probably hold in here much better, and I think that's where we need to focus on those central bank activities.
I think there's no question that the Bank of Canada ended its rate cutting cycle first. And I think that's a nice opportunity to take a look for a potential bottom in the CAD. We mentioned the RBA earlier, and this is what the Aussie did last year. Mostly flat, but you can see we had a couple runs here. We had a big sell-off here. It basically was flat throughout the year, and the RBA was totally different than the RBNZ. That they were saying, we're not going to cut rates. We actually see risk to the upside, which was crazy at one point. And you can see that really helped its currency stay higher. But then we had the Kiwi, where the RBNZ in September got really dovish and started to cut rates aggressively. And you can see the fall that we saw throughout the end of the year. So the RBNZ, right here, right now, is still one of the most dovish central banks. But there again, how far are they along their rate cutting cycle? They're probably closer to the end. And if the RBA has to play a little catch up, this is where we actually see some opportunity in these markets. So I've got that the CAD and the yen are likely to be the strongest currencies. So these are the predictions. These are the predictions that I'm going to be forgetting in about a day from now, because I'm just going to trade the price action. If I'm in May, trust me, I will not remember that I said this in January. I'll be looking at the chart and only trading off of the relative strength and weakness of the charts. Then I've got Aussie and Euro on the weak side. So Aussie is the number one on this one. I think the RBA, if it gets into a rate cutting cycle, is going to basically say, oh, we messed it up in 2024. All that strength, and again, it was just flat, but all that strength that we manufactured here has got to come out, just like we saw with the Kiwi. Right, so that is our Forex predictions for the year. Let's jump in and finish up with our crypto predictions of the year. This is the crypto basket. This is the crypto basket of the four currencies we trade, equally weighted. And this was the first big run that Edge talked about in February. Monster run. And then take a look at what happened here. We had a period of time where we sold off for about 4 to 5 months. And this pullback, if you take a look at it, 68,000 all the way down to 40,000, that's like a 35-40% sell-off. And that's what crypto does. It does 80% up, and then it sells off 40% down. So we got basically another big 80% rally, maybe even a little bit more. Here we're starting this little pullback. And look, I know that we've got this nice little bounce here on a weekly chart, but I think if you've been trading crypto long enough and watching it, it goes in these big cycles, big runs, followed by months and months of consolidation, backing and filling, selling off. And in my lifetime, I've seen 80% corrections in the crypto markets. I think we're at a different place because crypto is much more mature. And right now we have a US administration that is very pro crypto. So I don't think we're going to get as deep of a sell off. What I do think is that it's going to need to take a break. And I always give the analogy of a sprinter. If you're a sprinter and you go on a 100-yard dash, at the end of that dash, you are exhausted. You're exhausted. For you to sprint again, you have to take a break. And it's not a 5-second break. It's a 5-minute break or maybe even longer break. Then you have all your energy back before you can give a full sprint again. I think that's where we are in crypto. I think we had a huge sprint. I think everything's good. I don't see as big of a pullback as we've seen before, but I do think we're going to have at least 3, 4, maybe even 5 months of some consolidation before we get bullish again. Like I said, I'm going to make these predictions. I'm going to forget them tomorrow, and then I'm just going to trade price action. I do think the real risk is if you were trading in the really small cryptos that just got all hyped up, I think those are going to have that big pullback. So I think if you're looking at Bitcoin, Ethereum, the larger ones, they're going to hold in okay. The things that went up 4,000% last year are going to lose quite a bit of that, while the rest of the market takes some time to digest and consolidate. Ultimately, I think by the end of the year, Bitcoin is likely flat. I could see it ending the year at 100,000, but I think it probably gets down into the 70,000 area at one point in the year. So it's definitely a second half of the year story for me at this point. All right, so to sum up all of our predictions here, S&P is looking to be a little bit below average. Interest rates, we think the RBA cuts, we think the Bank of Japan raises. Commodities, we think that oil's flat again, but we think this year is not a good year for metals. We think metals actually sell off. We've had 2 monster years in metals. Look, it's not going to be huge, but we're talking about maybe 5 to 10% down after basically being up 60, 70% over the past 2 years. Currencies, we like that yen. We like that yen. It's not ready yet, but we think at the some point of the year, the Bank of Japan is going to start to raise rates. And then I think we're also going to get that panic sell-off somewhere in first or second quarter that is usually only positive for the yen. And crypto, we think there needs to be a rest. We need a rest before we can get another bullish move. So those are our predictions. We will put these to bed, and I will bring these out next January and see how well we did. Remember, we're not going to trade off these. These are just fun little predictions. We're going to trade off the price action on charts. That's it, not these ridiculous, silly predictions. All right, let's talk about this year at Maverick. We are always looking to add new traders. If you know any great currency traders, we would love to have them. We are going to be doing a Vegas summit this year. We have been doing Vegas summits, not Vegas summits, but summits all over the U.S. since 2010. And then in 2020, COVID got that one. COVID killed that summit. And then we did another one in 2021. And then the new Omicron virus killed the one in 22. We had to cancel that. Inflation killed the one in 2023. We didn't do it in 2024. We are back to doing yearly summits. Let's cross our fingers. No new pandemics happen. But we're very excited about this. This is where we get together. We all go to one location. We meet in person. We hang out for 2 days. Yes, we do some education, but it's mostly just having some fun. We have some parties. You get to meet other traders that you can get along with. It's just a wonderful time. If you can join us, the dates are April 26th and 27th. We are finalizing up all of the details, and somewhere in the next week, we are going to be getting a link to you to where you can actually register, sign up, and get all the plans. We've got discounted hotel rooms for you available. We'll have all that information. On the schedule, we are going to be putting together some courses to how to use AI to improve your trading. So we're going to be working on that, and we want to grab onto this AI. I don't call it an AI boom. Is that as a trader, you have to innovate. I started trading in 1997. The market is completely different. Technology is completely different. If I was still trying to trade like you did in 1997, I'd be dead. Like it wouldn't have worked. We always have to be innovating, and AI is absolutely going to be part of this. And we want to show you how to use AI to make yourself a better trader and really how to speed up the process of backtesting. That's going to be the greatest thing about AI is all the things you used to have to do methodically by hand and keeping records and crunching numbers. AI is going to help you do that very, very quickly. So we're going to be putting those together. And also we are going to be adding a formal futures trading course to the Maverick Currencies curriculum. We have always allowed futures trading at a certain level for Maverick traders, but we haven't really given any guidance on ways to do it, how to do it. We've heard from our traders say, hey, what about futures? We want to be able to get registered for futures and be able to trade futures. So we are going to be adding a futures trading course where you're basically going to earn your futures trading certification. Once you get that certification, you'll be able to trade futures right in your Maverick accounts. Let's go ahead and wrap this up. Thank you so much for a great 2024. We do this video because we love to do it, and it's really nice just to, like I said, put a bow on 2024, send it off into history, and then really focus about 2025. We're so thankful for you as our traders. We are dedicated to helping you be the best version of yourself. So let's have a great 2025, and let's go grab all those pips that are out there. Goodbye, everybody.